Good afternoon, everyone. Just wanted to welcome you all here to the crypto panel discussion led by Venture and Capital. The discussions and topics today will be trends in exchanges and infrastructure. And I just wanted to formally welcome the audience watching here tonight. This is such a great opportunity for all of you to not only see what's happening behind the scene here in Australia, but also have an opportunity to discuss the changes in trends and the opportunities for investment potential and everything else combined moving forward. So if it's all right with you guys, would love to get started if that's okay.
Absolutely.
Sure, mate.
Beautiful. So look, I'll start with you, Matt, if that's all right. Let's get right in. Now, this ecosystem, it's more of a primordial soup at the moment. We don't really have any regulations, but the market cap is edging that $2 trillion now. So it's here to stay. What emerging technologies and trends in blockchain and crypto have you observed personally and suspect might continue unfolding moving forward?
Yeah, look, mate, undoubtedly because of the industry, there is just constant change. It is continual change. And I suppose, depends on which part of the market we're talking about, I think. So I think in the, in a part of the market where we operate mostly, which is with institutions and larger allocators of capital, the major thematic remains sort of regulation and the requirement for ongoing clarity of regulation, I think. A good example of that is, ASIC's paper, consultation paper a couple of weeks back, looking at the potential regulation of exchange traded digital asset products. The constant, we see that across the region, right? Constant sort of positive regulation. I suppose with respect to new technologies, it's probably not surprising that in the last quarter, I mean, we're getting more and more interest in hearing about NFTs and access to NFTs, and and you're starting to see, I guess, some fairly sizable and credible institutions sort of starting to demonstrate their interest in the space. Like Visa, for example. They bought an NFT, for their collection, a couple of weeks back at 150 grand.
Yeah, a crypto punk.
Yeah. So, it sort of depends on which part of the market you're looking at. The great thing about the market is there's always some part of it evolving and moving and some sort of new technology evolving across it.
Yeah, good answer. I couldn't agree more with that, in particular with the NFT space. One that I've noticed as well that's seeing a lot of explosive growth recently is DeFi, decentralized finance. I personally think that's here to stay, and it's going to completely revolutionize the way traditional finance is occurring. What do you think are the biggest threats to DeFi? And do you think at some point there's going to be a bridge between both centralized and decentralized finance where they merge together so users can access DeFi through a centralized system?
Yeah, look, I think there's the major challenge for DeFi going forward is how to bridge the regulatory gap. Once again to see. I mean, there's obviously, there's quite a lot of crypto hedge funds that and individuals obviously who invest and stake directly with DeFi protocols. To move that into the up into the multi-trillion-dollar formal sort of asset management industry, sort of you need the regulation to sort of tag along behind it. I think we're probably really only at the front end of that.
I couldn't agree more. I think despite Bitcoin being around for close to 10 years now, the ecosystem, I'm sure you're all aware, is continually expanding. Every boom and bust cycle, there's a new pool of cryptocurrencies that enter that top 50, top 10. And I think you really hit the nail on the head there. Moving forward, the NFT platforms, some DeFi ones, pending regulations, will be probably the best types of opportunities in the space moving forward.
Sounds right, mate. But that's the thing about the space. We don't know what's next.
Yeah, and that's exciting, but also quite daunting, isn't it? Could be a bit of a double-edged sword. All right. Now, Caroline, what I really wanted to ask you was the lack of regulation moving from what we just spoke about with Matt. Do you think that's potentially harming the innovation? And do you think that the regulations that are obviously being spoken about now could positively influence the industry moving forward?
Yeah, absolutely. But and also, first of all, thank you very much for having me. It's really good to be a part of this event. From my point of view, appropriate regulation, proportionate regulation is going to be an absolute boon to the industry. I think that what it gives to investors, both in cryptocurrency, but also in the entire industry sector itself, gives it that surety, gives it that comfort. As we've already said, we already know that crypto is here to stay. It's not going anywhere anytime soon. But we still need to give the investors the confidence to put their money into this sector to really grow it out and take advantage of the situation that we're talking about with DeFi, NFTs, et cetera, et cetera. And that's both, as I say, both in crypto and in the infrastructure piece itself. But, it's not just a trend, that good regulation is a trend to spur on investment that's been noted by the likes of the World Bank and by the Bank of International Settlements, the OECD. They've all conducted studies at various degrees that kind of confirm that this good regulation has a positive impact, particularly around financial services, which really and truly is where crypto comes into its own. So for us here in Australia, and I know that obviously Adrian and myself are both on the board of Blockchain Australia, who've been really active in trying to push forward a proportionate regulatory response here in Australia. And I think, that seems to be the way the wind is blowing. And I think for ourselves, the Independent Reserve and other exchanges, the good solid exchanges that are looking to stay around for some time, will welcome it when it finally comes through. But likewise, I think there's always a sense of people getting a bit concerned when they hear regulation. I think there is this sense of impending doom, like it's going to smother all that's gone before it. But I don't think necessarily that that's going to be the case. And I'm certainly quite positive about the scene here in Australia, that's for sure.
Yeah, I agree with that as well, in the sense that a regulatory body like the Securities Exchange Commission needs to come out with definitive guidelines for a lot of ICOs to follow. Are they a sub-commodity, a sub-utility, or a sub-security, for example? I think XRP is currently battling a lawsuit right now that will determine the outcome of whether or not it's a security or a utility token, for example. Now, I think that type of regulation will bring a lot of consumer and investor confidence to the space, and that's what you need to see more big institutional players take that extra step forward. What I really wanted to ask you about was, in particular with the DeFi space, how do you regulate something that's decentralized and not really owned by anyone? If no one owns the network, then how can that be regulated with no access to the code base, for example?
Yeah, this is really exciting. And I love the fact that we now get to discuss things like DeFi and DAO and all these really fantastic concepts as they're being rolled out. And it's a real puzzler. I agree. I don't think any one framework has yet come forward that people can say, oh, yes, this seems to work best for DeFi. With the scenario that you had indicated when you were talking to Matt there, where people are using centralized exchanges such as easyMarkets, Independent Reserve, and others to then access the DeFi world, where you obviously have to pass AML KYC through an exchange such as ourselves, but then once you're in the DeFi, you've got that anonymity, is one potential scenario. So that the regulation from an AML KYC certainly will be in place. In the actual DeFi itself, that is for smarter brains than myself to tell you how they're going to regulate that. But also, how can you do something like that? It's instantly global, it's instantly international, it's instantly multi-jurisdictional. And I think you're going to be looking at the likes of, I suppose, regulatory leaders and the US, probably out of London. You want to look at where Europe is going, and other major powerhouses of regulation to see how they're going to tackle it. It's really interesting to see what's coming out of Wyoming. And fair play to them, they've had a good punt at it. And I think that that's a really good start to try and tackle some of these issues around DAO and all the rest of it. But for me, I'm quite thankful that all I have to do is look after an exchange and not have to respond to these trends from a regulatory point of view. And all we can do is try and contribute to, through bodies like Blockchain Australia and others, to the conversations that are happening nationally. And that's the thing here in Australia. There are so many top class DeFi projects that need the support and need the surety of understanding where the regulatory winds are blowing. I think the big mistake would be for any jurisdiction, and I know some jurisdictions have taken this approach, even just with crypto, where they put in some kind of blanket ban. And I don't think that that's a sensible approach. And I don't think that's going to work with something like DeFi. But good luck to the regulators trying to deal with it.
Yeah, I totally agree. You can't hit this space with a very broad stroke. You really need to scrutinize the underlying technology and the potential of said technology without obviously stifling the innovation being born here. But also, how do you stop things like rug pulling in DeFi liquidity pools, for example? Right. I mean, it's happening and it has happened. I know of a few people that have bought into something and anticipated that the yields would have paid them out, and then before they had the chance to, it got rug pulled because of a flaw in the code. So. Yeah.
Do you think then that something like, sorry to interrupt, but do you think there was something like the smart code, those smart contract reviews, those code reviews that are happening, that's going to become a sort of micro industry to kind of feed into all of this and perhaps attach to regulation in some sense?
Absolutely. And in that sense, the definitive guidelines for how the code should be brought about and built and expanded upon with the development, it really needs to be, like you said, heavily scrutinized. You can't just hit it with a broad stroke of the brush there. And, in saying that, aren't we still so early in this space? Bitcoin, I think, has been around since 2011. That then led to Ethereum in 2014, and fast forward close to 7 years later, you've got over 9,000 cryptocurrencies. I can only see that number growing. Wow. And eventually these regulatory bodies that are more or less sitting on the bench at the moment, they really will need to step in. So it's good that you've got that belief, that ideal, and we need visionaries like all of you sort of openly discussing this and maybe even giving them a few ideas to come out with a regulatory framework that benefits the cryptocurrency ecosystem.
As I said, smarter minds than my own.
Oh, don't sell yourself short as the CEO of BTC Markets. Now, I suppose, Adrian, this more or less ties in with both you and Caroline here as leading the front charge for exchange services, not only in Independent Reserve but BTC Markets. What trends have you noticed with a lot of the accounts being opened? Are they still on that retail side, or are you seeing like that self-managed super, that institutional grade of account and clients starting to show more interest?
I think the main underlying trend that we've seen over the last year or two has just been one of growth. So I guess I'd say the last year was probably our busiest year ever. And I guess I'd pretty much say that every year, except maybe 2017 was particularly busy. But I guess last year was about as busy as 2017, except I think the main difference is now the industry is a lot more mature than what it was back then. So everyone's got much bigger teams and everyone can kind of absorb the growth a lot better, which is great. And I think overall, I've been in this space now for about 8 years, so I've kind of had a long-term view of all the trends. We're seeing more and more sophisticated investors enter this space. So when we launched, I think back in 2013, 2014, like if you were to go to a crypto, if you were going to go to a cryptocurrency meetup, the people that you'd meet would be a lot different to the people you'd meet now. And I think this reflects in our customer base as well. So we're definitely seeing older customers now. So, back then they were kind of the early technology adopters. Now we're kind of seeing more the forward-thinking investors. You're seeing SMSFs. And yeah, definitely the average age is increasing, as is the size of the investments people are making and the level of, I guess, due diligence they're doing. And yeah, just more mature, more sophisticated investors. I think that's kind of the underlying story.
Mm-hmm. And you were saying Independent Reserve, and I'm sure BTC Markets would have seen a record number of people signing up to purchase cryptocurrencies through the exchanges. What is the next big thing for you guys? Would you be offering users the opportunity to maybe stake their cryptocurrency in the wallets you have online, or maybe even considering introducing debit cards for them to sync these wallets and even transact with the crypto? That's what this is all about, right?
Yeah. So, I mean, I hate to sound like I'm in an echo chamber, but I think we're going to see the regulation begin to come in Australia over the next year or two. And I think this regulation will really dictate the products that we're able to offer. So, a lot of Australian exchanges would love to offer a richer suite of the products that they're offering, but, the directors tend to be a little bit risk averse. They don't want to go to jail, which is pretty understandable. So you'll find that the offering by Australian exchanges maybe isn't as exciting as that of some other international exchanges who don't care as much about the regulation. But I think as we see the regulators start to catch up to the products that we can offer, we will begin to offer these slightly more exotic things as well.
Great to hear. It's really amazing to see that Australia is sort of really taking a bold stance and adopting a lot of these technologies moving forward, and then offering them to both retail and commercial clients. I agree with you. I think that the way our government is looking at cryptocurrencies, it won't be too much longer before we do start to see a regulatory framework into this space. And moving forward, do you think that's going to maybe shake out a lot of the weak hands here, and then that will cause some volatility, and then might take another 6 months or 12 months for that confidence to come back, and then this next bull market that may come in coordinates with the BTC halvening cycle will be the one that you sort of don't want to miss out on?
Yeah, number go up, I guess. In the story, like. Look, we don't really speculate on the price of cryptocurrencies. We just kind of provide people to trade. But there's definitely a lot of excitement in the market right now. And if you listen to the market commentators, I think a lot of people are predicting a bit of a run over the next few months. But let's wait and see what happens.
Yeah, like you said, let's not speculate. We'll just sit back and enjoy the show and see how it all unfolds. Well, I do. And I suppose that brings me to my next question. And Matt, if you don't mind me including you and starting with you first, and then working through the ranks, do you own any cryptocurrency, or? Yeah,
I do. Yeah, I do. Yeah. I've been, I guess, my background's traditional sort of finance, long time at Macquarie Bank and ANZ Bank. But I first was interested in crypto back in 2013 by a pure accident, actually. We'd sort of put in a trading system into the bank using GPUs, and we're sort of sitting around working out what we'd do with all sort of the computing power overnight. And from that really sort of led to learning about mining and understanding about sort of BTC, and from that became a lot more interested in just the underlying technology and the distributed ledger technology and just what it does. And again, having been inside traditional banks and understanding the flaws in traditional payment rails and everything else, it became pretty obvious to me sort of fairly early that this was a technology I needed to not only understand, but also to own some of. So like everyone, don't own enough, of course, but that's that's a usual story.
Did you say you were mining in the bank, like using the bank's?
No, conceptually, there was no way, right? But
bit of Monero in the servers.
But it was just became a philosophical discussion with the quants in the bank as well. Where this actually makes a lot of sense. Like if we could do this, but from just every possible reason you could imagine, it would never happen. But so that's how I got involved, and then invested after that.
Yeah, good to hear. And Fran, if you don't mind me asking you this, in terms of crypto adoption and blockchain being used by non-technical users, would you like to elaborate on your vision for scaling and crypto adoption? What would be the biggest sort of honeypot that would bring more adoption in?
Sure. Yeah. Hopefully, a connection here is stable enough. And thanks for having me.
Pleasure.
Well, look, we've watched this space mature from an anarcho-capitalist dream in 2010 to what it is today, and it's gone through all these epochs where a lot of infrastructure and middleware had to be built out. So in 2017, late 16, we kind of realized that DeFi is going to be a thing. Before that word sort of existed, and what that meant to us was the automation of value, so that you could digitize any type of value, and then you could do stuff with it. Like I could say, pay Griffin $50 if it's sunny next Tuesday, or you could take a picture of a pet rock and digitize it and sell it for $1 million as an NFT. It's outrageous.
It's
Actually,
crazy.
I saw an invisible pet rock sell for free BNB the other day. It was literally just a blank picture. So, be careful of NFTs or anything that's gone up sort of 2000x in the space of 3 months. But that's beside the point. The adoption requires infrastructure and solid on-ramps, right? So that comes through the formal conventional ways of having this inside your brokerage accounts at a click of a button, buy Bitcoin ETF, whatever it is, or at a click of a button through something Grammar could use, which is almost where MetaMask and DeFi have sort of gotten to, so that once you hold some crypto, once you've onboarded to crypto, you've got digital value, and now you can tell it to do something like go and earn me more money than my bank is giving me as interest rates. That's why stablecoins in particular are very interesting, because what do we get, 0.5% annual returns or something in your typical savings? You get that almost per day in a lot of DeFi projects. And they're not far off the same risk profile. It just really depends on counterparty risk and technology risk, and even that is becoming more clear. The true adoption will come from the elephant in the room, which is the central banks printing an unimaginable amount of money. It's completely and utterly sustainable, and it simply won't last much longer. So you're going to see a huge influx into crypto just simply because of inflation, uncertainty, societal and geopolitical uncertainty. September and October are going to be the beginning of the brutal period. And I expect to see, trillions flowing into anything that can be quickly and easily moved around. I'm already seeing mass inflows into gold and silver and other precious metals, as well as obviously crypto. So I'm sticking with my 112K USD per Bitcoin by December 20th call that I made earlier this year. Just depends if there's anything worth buying by that point in the real world.
Yeah, Fran, that was really eloquently put. I agree with you there in the sense that the Federal Reserve is playing one of the biggest reflation games of chicken that this financial system has ever seen, and that in essence with the money printing and the asset price inflation that's occurring because of that will inevitably force people into hedging their bets. And
it's out of ammunition. It's completely stuck. It can't unwind. It can't print more. It will print more. And there'll be a point where it just collapses. There has to be a new system put in place. And then, we can speculate on what that is, but it's kind of like Plan B is already there. Crypto and programmable money is already there.
Well said. Well said. Now, just on that note, I think Ethereum personally is going to be one of the biggest cryptocurrencies that adds a lot of utility through that alone, through DeFi, NFT platforms, smart contracts, being able to settle vast amounts of money for a fraction of the cost of what you'd see in traditional finance. Do you think Ethereum, as it currently stands, as it moves across from proof of work to proof of stake with the layered Ethereum 2.0 upgrades, do you think this eventually will have the capability to become a large part of our future financial system that turns completely digital?
I think it's already begun. I'm already seeing smart money view Ethereum as a store of value for the first time in years, as opposed to just a programmable sort of money base. It's doing what Bitcoin did in the sense that the transactions are getting very expensive on the main layer. But unlike Bitcoin, we have seen a lot more developers and layer 2 solutions and interoperability solutions. So you've got Binance Smart Chain, which is not quite decentralized enough, to say the least. You've got Solana, which is just proving its throughput at this time. Ethereum is strong and steady. So I think there's a role to play for a lot of these currencies where you might see some that are, for niche purposes, like money remittance or cross-bank, cross-country and interbank, settlement, and others for, dApps of all kinds of dApps in the spectrum that you could imagine, that we can't even imagine at this time. But yeah, I just view it all as a sort of 2-decade wave of the digitization of value. And Ethereum has a very strong role to play. I see it being at least 8K by the end of the year. We've been bullish on Ethereum, and we're accumulating when it was below $100, and we will continue to support development of that.
Yeah, good. Ethereum, I would like to say is my nest egg too. I wish I could have accumulated a little more of it when it was under that $100 mark, but like you said, there's always new innovations being born. I love that Uniswap and version 3 has just been patented, for example. I'm also a massive fan of Matic, Polygon. I think their scaling solutions with the Ethereum network are going to be very, very important moving forward. And eventually, like you said, the gas fees with the Ethereum network at the moment, I mean, that's the whole point of moving across to proof of stake, isn't it?
Yeah, absolutely. Look, I think that sort of within 5 years, if not less, you won't even know what blockchain or need to know. It'll kind of be like Intel Inside, a little sticker on your laptop, right? And liquidity will just simply be aggregated and cross-chain and super easy to deal with. So liquidity will just move around to wherever the yields are the safest and the highest. Like just today, I launched something which is the world's first or industry's first fully customizable automated market maker.
Wow.
So just like PancakeSwap or Uniswap, you can actually choose what swap fees you want, and you can choose what to do with those swap fees. You can go and add to your APY or reduce supply or pay affiliates or whatever you want. And we're really surprised no one's done that yet. So I think liquidity kind of finds its way to the most efficient use of capital, just like in the real world. But now it's happening in such a radical hypersonic speed in this industry, and it's really exciting.
So I think we can all agree moving forward that this space will only keep growing and becoming more and more viable as a solution just to transact from person to person, but also settle vast amounts of money moving forward, but also the inflation hedging side as well. That was the reason I decided to delve into cryptocurrency. I mean, you guys all would have had the golden decade and real estate, and my father, who's quite traditional in that sense, wanted me to pull my funds into something like a Vanguard ETF, and that's when I sort of discovered cryptocurrency in early 2017, and I will always be involved in this space moving forward. So it's been such a pleasure to chat to all of you visionaries. It's great to see you leading the charge here, and keep it up, please. I really hope this is the first of many future conversations with all of you moving forward. And thank you so much for giving us your time here today. If there's anything else you guys would like to say or have any, not necessarily advice for our viewers, but in terms of industries to keep an eye on and things to watch out for moving forward, where would you like to guide people?
You go, Caroline.
Okay, well, mine's just going to be very simple and straightforward. I think a lot of people, this isn't financial advice. I don't have any financial advisor qualifications. But what I would say there is that for a number of people, there's a concern that they've missed the boat. And I think it's to kind of reiterate to people that this is just at the start. There is still time to get in and get involved. And also not to be too overwhelmed by the sheer scale and breadth of the technology and where it's all going. It can be very easy to be, I suppose, intimidated by what's happening in DeFi, what's happening in NFTs, what's happening in all these different sectors. Just start off by getting familiar with the big kind of crypto, the Bitcoins, your XRPs, your Ethereums, and take it from there. And don't feel too intimidated to learn, because that's how all of us have started, and it's still so early in where it is in its adoption cycle that anyone who comes in is still in at the early stages of crypto. So that would be my advice, is not be too intimidated. But Matt, you probably got something far more sage and wise to share.
Oh, of course. No, No, I was just going to say, no, what I find useful is just getting involved in new stuff as well. Personally jumping in and making the mistakes. You know, I opened an OpenSea account a week before last and just, bumbled my way through sort of NFTs and, starting to experiment. And I think that applies to anybody, no matter where they are in sort of the journey of adoption for digital assets. It's just experiment. Clearly don't blow yourself up, but just do little bits. Start to understand how the market microstructure works, how the protocols work, how different parts of the ecosystem operate. And I think people that are, no matter where they are on the journey, that's once you start doing things, it becomes quite clear to people. I shouldn't say it's not that hard, but it's rewarding, enjoyable, and hopefully adds to portfolio value.
Yeah, I agree. And I think in that sense, spend the time researching, start with the Bitcoin white paper, even understand what blockchain is, how Bitcoin works as a peer-to-peer network. And I think above all else, patience does pay here. The space is very, very aggressive. I don't think we've ever seen another asset class that's been so aggressive and volatile. So I think you hit the nail on the head there. Don't FOMO, which is the fear of missing out. Start small, get to understand the macro cycles and the structure of this space, and then slowly dip your feet in and see how the water fills before jumping in. Adrian, were you about to say something on that note as well?
Yeah, absolutely agree with everyone. If you want to be your own bank, you really have to take the time and the effort to educate yourself about how to do that. It's not that hard, but it's also not that easy. You don't want to be one of those people trying to figure out the password to an encrypted hard disk. You don't want to be one of those stories. So I think the real key here is education.
Yep.
And the information is out there. There's a lot of information out there. You just need to really take it requires a little bit of effort, but I think it's well worth it. And it's not just education about the cryptocurrencies that you invest in, but also the platforms that you use, because this is an unregulated space. There's a lot of exchanges out there. I'd recommend using one in Australia, because even though the regulation here maybe isn't quite complete, I'm quite sure everyone in Australia is doing their best to do the right thing. So yeah, I think the real message is education.
Yeah, absolutely. And I definitely back up and reinforce that using an Australian exchange, despite the space still being unregulated, you do get a lot of protection with ASIC law here and compliance with the Australian exchanges. So that's good to see. And you mentioned that there's a lot of free information out there. And for some people in particular, the older demographics that didn't really grow up with the new technology, it can be quite daunting. So in the most educational way possible, where would you honestly start if you were looking to get involved in this space?
So we actually have a book that a co-founder of mine, he wrote in 2014. It's available on our website. It's actually a really well-written book. It explains basically what cryptocurrency is, what Bitcoin is. It explains the risks, and I think that's a pretty good place to start. But there's a lot of other resources out there. There's some great YouTube videos. Andreas Antonopoulos is one of my old favorites. He explains Bitcoin in a way that I've never really heard anyone else explain. I remember watching him like 2013, 2014 once. I watched him live in Australia, and I just walked out of there and I just wanted to buy more Bitcoin. I just wanted to this guy was just incredible. An incredible public speaker. So yeah, he is definitely one that I would recommend.
Mm-hmm. And Fran, as last but not least, someone who's really involved in the space, literally when it comes to writing code and even building and developing certain projects. Where would you start if you were looking at value-based investing and looking for potential investment and growth moving forward?
Value-based. Well, There's a lot of decentralized ETFs coming to market. It's been 5 years building those, so they better be coming to market. Sort of like index-based funds, but you simply buy them and custody them yourself. So you can buy something that gives you exposure to the top projects and, say, the NFT landscapes if you want sectoral-based exposure and a sort of thematic thesis that way. Or if you want DeFi, we have Techemy.capital, again, self-custodial DeFi products where it's relatively easy to just hop in and have somebody else, an entire team sort of deal with the hard yards of figuring out what to buy and rebalance and all the rest in a sort of more active strategy. But yeah, my final thoughts are just simply, I agree with everyone, education is the most important. Do it quickly, do it well, and don't expect to know everything immediately. It's a journey. And for financial success, just basically read everything the World Economic Forum says and does, and do the opposite.
As with the Fed, I couldn't agree more. Listen to what they say and focus on what they actually do when they say it moving forward. And
Yep.
I couldn't agree more with everyone here. I think this space is just getting started. Don't worry about rushing in too brazenly with everything that you do have. Be patient, get to know the space. Obviously, focus on the education piece. Do it quickly. Use the resources you can. And I think in essence, that's another thing regulations really, really need to hit the nail on the head there is you can't stop someone coming out with a false announcement that Amazon's going to start accepting Bitcoin, for example. Bitcoin rallies maybe 10, 20%. And then on the day, like a Sunday, for example, when the majority of the regulated exchanges like CME and CBE are closed, the price of Bitcoin goes up 10, 20% because there's less liquidity. Then come the Monday open, Amazon acknowledges that the announcement isn't true, and it just gets absolutely hammered down. So I think regulations need to come in. You need some really powerful guidelines to stop people manipulating it. And I think moving forward, we've got such a beautiful space here being born. 2 trillion market cap, in my opinion, is still just the tip of the iceberg. There's 50 trillion in the stock market, even more. I think with FX, the Fed alone has printed, I think, a third or a quarter of the US money supply this year alone, just to stimulate the markets with the liquidity. And I think with the tapering talks that are starting to come into the window now, and then what they'll have to do is obviously take that liquidity out of the market through reducing the bonds that they purchase. And that's more or less the first thing they do before interest rates rise. And Fran, I actually would like to go back to you for this. The Fed has really put themselves between a rock and a hard place. And where do you honestly see this going, if you don't mind me asking? And that's open to all of you, in particular, Matt, Adrian, and Caroline as well. Where do you think, where's the next step for this entire financial system? Hyperinflation, disinflation, interest rates?
Well, look, I mean, it's just so up in the air right now. They wanted their great reset, and it's falling off. The wheels are coming off all over the show on that one. Just watch Klaus Schwab and read his book, and you'll sort of see the vision that they had for humanity and how they got all the different stakeholders to sort of drum the beat for the last 20 years and really pushing it hard over the last 2 years. Economically, they want something called stakeholder capitalism, which frankly is just a fancy word for fascism. So honestly, I don't know. I expect extreme volatility over the next couple of months because they're just running out of tape. There's not much they can do. And it just depends on what infrastructure and systems are ready to go to replace that. I would love to see a sort of basket of precious metals underlying some form of new greenback of sorts. But it just really depends on where this kind of world shift from a unipolar to a multipolar order settles itself. It's not going to be quick, so it's going to be chaotic for at least a couple of years. Hence why crypto is doing so phenomenally well at this time.
Yeah, instead of the Nixon gold standard, you have the Biden Bitcoin standard. Matt, yeah, I couldn't agree more with you. Matt, where do you stand with this? Where do you think things are heading at this rate?
Yeah, look, I'm probably not as bearish on global financial system as is Fran. Look, I think the US balance sheet is now on a point where it's, it probably just needs to be deflated away over the next 2 decades. It's clearly the size of the sheet can't be taken off. So that's, I suspect that we wind up in a period of just very, very low or zero interest rates for a very protracted period. That is going to just result in, some very strange behavior, both in bonds, in other, bonds of other governments, so other govies globally. I think there's going to be very interesting to watch sort of dislocations between sort of US balance sheet and, China balance sheet, for example. Almost unequivocally, we'll see a digital renminbi in the next 5 years.
Yeah.
We're going to, I think the point is it's going to be very, very different. I think this dislocation is going to be very different to the one that, we've sort of seen in the 20s and 30s. I think it's going to be very, very interesting next 10 years.
Yeah, I agree with that. Like you guys all say, it's best not to speculate and just let the market do its thing. And you do have to participate, unfortunately. Otherwise, you will get left behind. And I suppose this is a question for Adrian and Caroline. If you're on the fence with cryptocurrency, but at the same time, you know that banks, with dismal interest rates, and then the inflation on top of that doing everything to corrode the value of that dollar, what cryptocurrencies would you like to start off with or begin taking the plunge into before you then start increasing that risk appetite, for lack of a better word, with different cryptocurrencies?
Look, it obviously depends on your risk appetite, but I think people should learn to walk before they run, and I kind of start with the major cryptocurrencies. So, but I guess by doing that, you're less likely to have problems with liquidity. You're less likely to invest into a scam. And then I guess as you get more comfortable with this whole space, more familiar, then you can try to invest into something a little bit more exotic. But as you do that, the risk of that obviously also increases.
So in other words, don't start off with a blank JPEG NFT that's selling for about $10,000-$20,000.
I probably wouldn't, but then again, I'm not the best investor. So.
Hey, someone out there thinks otherwise. They wouldn't have bought it. Yeah. And Caroline, just on that note as well, do you agree with Adrian there? Start off with one of the big cryptocurrencies, your Bitcoins, your Ethereums, Ripples, for example. Maybe not Ripple at the moment because they're going through the SEC lawsuit to determine if they're a security. But when it comes to just taking that plunge, do you see that most people, when they sign up to the exchange, BTC Markets or Adrian Independent Reserve, do they buy into something that's caught in a hype cycle like Dogecoin, or do they try and rationalize their preferences and start off with something like Bitcoin or Ethereum?
Sure. Well, there's probably a couple of points I can respond to on that, but probably I would absolutely echo the sensible kind of points put forward here about investment, and obviously all the usual caveats around not a financial advisor, but taking that more tempered view on investment is always a good place to start. And we see that with our investors that come onto our exchange. The majority of them, actually from research, we know the majority of them do their own research, that often used phrase, but they do read the white papers, they do the investigation themselves because they have to, because there isn't many financial advisors that can assist them. Where we found it of interest is when we look actually at SMSF investment activity. And we looked at the top 4 cryptos that SMSFs in particular would invest in. And as expected, it would be Bitcoin, Litecoin, Ethereum, XRP, all the standards. But interchange with that, we would also find hitting into the top 4 would be projects like BSV or ETC or others that would be outside the top 5 anyway on any given month, generally on the exchange. But for some reason, these SMSF investors, and they're moving in relatively considerable shapes, were trying out these other projects not every month. I mean, the top 4 generally would stay the top 4, but it would be interchangeable. And that to me said that these investors, as our research has said, are taking on board to do their own legwork, to get comfortable into these projects before you're putting money in. And SMSF's the way that they have to operate as well, with the risk appetites that they have, that sometimes can be constraints. They've obviously taken a considered view. But to go back to the earlier question, where you kind of talked about where the financial system is going. And this is the thing that kind of gets me when I hear Bitcoin contrarians. And and I'm not necessarily a plus or a minus, people can make up their own mind, do your own research. But when I hear Bitcoin contrarians talk about how, falling back to fiat, the current and existing system always as being the best that we have, history teaches us that money has changed in its shape and value continuously. It's like the purists around language. Language likewise throughout history has changed. Its inherent meanings may not, but the actual words and language that we use has changed all the time. We're always reinventing the wheel. And the people who are like the grammar purists are often the ones that get caught on the wrong side of history. And if you look at how slang has become mainstream, adopted within language, but likewise, if you look at the different currency systems, and more importantly, rather than currency, value systems that people have used to interchange with in the history of economics, that tells us that this isn't anything new. What we're doing with cryptocurrency isn't anything new in the history of humanity. And if you want a use case, you just have to look at countries in the third and second world, where their economies aren't as advantaged as ours here in Australia, in parts of Europe, in the US. They don't have the luxury of a well-formed financial services system that meets all of their needs and is actively looking to develop more. They don't have that luxury. And so particularly as we go into maybe the kind of economic setup that Fran's talking about and that Matt is discussing too, then you see the case of something like cryptocurrency becoming increasingly relevant. My personal view is that you won't necessarily have to choose. I don't necessarily think it'll be an arbitrary black or white system. I think that there will be room for both. But this idea that it needs to be binary and that only fiat can win, I'm sorry, but history tells us that is not the case. Mm-hmm. And so it was kind of dependent on economists, and it's dependent on these economic historians, it's dependent on market commentators to get up to speed with that and to be open to change. Humans don't like change. We all know that. And to the case in point about the speed at which cryptocurrency has come through, it can be really unsettling for people, particularly if you've come from traditional finance and have got all your horses are backed in this one particular race. It can be quite intimidating. But there's some fantastic literature, fantastic books written by esteemed historians. Don't take it from us crypto fanatics, but they will tell you, history tells us the future every single day. And all we need to do is go back and look at what direction that's pointing us in and look at the unique circumstances that we're sitting in, both from an economic point of view, but also geopolitically, and also with the likes of the pandemic that we're all going through, changes in the air. And something like cryptocurrency, and specifically Bitcoin, Ethereum, and others, they seem to be the future direction that we're pointing in. But I leave it with the caveat that in time, they too shall change. So don't get too entrenched in those and keep your mind open for what else could be out there. That would be my view on it.
Yeah, and I agree with you in that sense too. It's human nature to be resilient to change almost until there's a pivotal moment where your back's against the wall. And Fran, this is where I agree with you again with what the Fed's doing. Something has to change. Everyone knows this can't go on. It's just a matter of what happens first. And in that sense, it's probably not best to speculate. And if anything, this has just made me so much more keen to go and buy and trade some cryptocurrency now. I'm probably going to do that after this. Fran, I'd like to finish off with one question for you, mate. You've got some really nice predictions or forecasts with Bitcoin and Ethereum in particular. Do you think this is the birth of a new asset class taking over, or is this maybe an element of tulip mania through FOMO, or is that maybe certain facets of the cryptocurrency ecosystem that are quite bubbly, like the NFT space, for example?
Well, I like to use the analogy of, think of a highly overinflated balloon A, and a limp, uninflated balloon B. And the most amount of chaos and destruction as if one balloon pops. And so it's much gentler and better if the old world kind of deflates and the new one inflates. And we've been seeing that for 10 years now with Bitcoin. So 10 years is nothing in the space of time. And, I fully agree with the analogy that crypto and money is similar to language and how that's perpetually changing. I think it will be a point when the air gets sucked out of the old balloon and rapidly into the new one, slowly until suddenly. And we're reaching that point through just necessity. So, I'd like to see some form of new structure proposed years ahead of time. And we've heard about central bank digital currencies for eons. And we're now sort of seeing pilot programs, and they look terrifying, frankly, tied to political and other agendas where people can just literally delete your money if they don't agree with you, if they have power over the people in that sort of heavy-handed way. But I'd like to describe it as kind of a battle between ideologies. So it's not a bubble. It's just simply a inflation of a necessity. And it's a battle between fully unstoppable decentralized financial automata and basically using the blockchain to streamline the old world. But there's too many stakeholders that are made redundant if it's streamlined completely. So CBDCs are basically just centralized ledgers with efficiency gains for supply chain, this, that, and the other, but not for the freedoms, essentially, that crypto offers. So I like to walk in the middle and do things compliantly and build things that offer people a plan B and avoids the anarcho-capitalist lunatics on the far end of the decentralized spectrum, because a lot of that stuff is exciting because it's experimental and radical. But, all technology is weaponized. So you just have to be careful about where each path leads. So, absorb as much information as possible from the entire spectrum and then make up your own mind about, how you choose to spend your time and capital.
Mm. You've all got such beautiful perspectives. It's been an absolute pleasure chatting to all of you. And Matt, sorry, just one last question, if that's okay, because you're on the front line here with the banks and the institutions. You mentioned something about a digital yuan, okay? And you would have noticed that earlier on in the year, Facebook tried to launch their own cryptocurrency, Libra, but it was knocked back in Congress, I believe. And I think half the discussion was, if I don't know why I'm getting spam emails for clicking a link, then what makes you think we're going to allow you to start transacting a digital currency, a stable coin through the Libra? Eventually, it becomes a game of someone has to make the first move, and then very, very shortly after, you'll see someone make the second move. Do you think this current financial system will introduce something like a digital dollar that's meant to work cohesively with cryptocurrency, or it's one or the other?
Oh, unequivocally, I think every central bank globally will have a digital version of its current fiat version in the next 10 years. Unequivocally.
And if that is true, and I believe that will be true, the amount of liquidity that could come into cryptocurrency would just be absolutely exponential, right?
Look, I think what again, in my view, what central bank digital currencies do for public blockchains is it legitimizes them, and it just brings, I think that's your point, it just brings people into, to the extent that they are not already using what they think is digital money, using fiat payment rails, it's going to bring more and more people into the sort of the digital sphere, and that can only be good. In my view, that can only be good for digital assets, crypto generally. That's again, I don't think there's any. I think it's very, very difficult now to regulate out public blockchains and cryptocurrencies. I think the clear view from regulators now is this is an asset class that needs to be regulated alongside of, other asset classes and central bank digital currencies as they come online. A couple of interesting data points about Libra, or DM as the artist is now known. A number of the banks that we talk to a lot of banks in a lot of different guises, and what was very interesting over the last 12 months is that the feedback from a couple of banks and their sort of digital vertical innovation hubs was that the bank boards were not interested or didn't even have crypto on their radar at all until Libra was announced, because I think that was the money moment that they realized just the penetration of Facebook and what that could actually mean to, frankly, to bank competitiveness and the ability to, move from a, largely sort of centralized onto a more decentralized sort of framework. So they're very interesting, data point from inside the banks.
Yeah. Well, I think we can all agree here that the cryptocurrency is the future, and you've got plenty of time to let this space go from a primordial soup into a legitimate asset class. And there's so much innovation being born. And from what I've seen in my time trading, I've gone through 2 halvening cycles now. The pool of the top cryptocurrencies is always changing. You've got your big 4, your big 5, but the threat of innovation alone in this market will always give rise and give birth to new opportunities. And for that reason alone, spend time educating yourself with the technology and the potential that this can have, not only in just the financial system, but almost every system, every digital system that I could think of to date, whether it be social networking, just transacting, and everything else in between. Everyone, to our audience and our viewers, you've been so patient sitting here today. You've got so much time to sit back and get used to this ecosystem and how it behaves. And eventually, I think the more liquidity that comes into the market, the better. The volatility will always be there. But eventually you will notice that with every swing high, price goes higher than the previous one. With every swing low, it's a higher low, and the trajectory of these assets will continue to be up as we move forward. So I just wanted to take the time to thank all of you for watching today, and to our speakers, Matt, Caroline, Fran, and Adrian. I really appreciate your time today. I have no doubt all of you would be so busy with other things outside of this. So your time is very, very valuable. And thank you for letting me have the chance to not only moderate this panel, but also ask you a lot of questions that no doubt our audience has wanted to know or get a feel for, but also allowing me to throw in my own there in the mix as well. So thank you so much for your time today. I wish you all the best moving forward. I'm so grateful. I hope this is the first of many future discussions with all of you. Thank you again.
It's been a pleasure. Thanks.
Thank you.
Thank you. Cheers.